Hello and welcome to etbfsi.com. The world of FinTech is changing rapidly and we at FinTech Diary try to map these changes for you. My name is Amol Dete and my guest for this chapter of FinTech Diary is Harshvardhan Lunia from Lendingkart.
Harsh, glad to have you.
Thank you, Amol. Thanks for inviting me for this.
Thank you. So we have been talking since I think 3-4 years now.
Yeah.
And over the years, the whole lending space has also evolved and it has reached to a different layer today. The Gen Zs or Gen Y, the new generation can obtain the loan so seamlessly and easily today. How do you see the major trends in the lending segment right now?
So I think the trends can be both in the terms of consumers who are taking it and trends in terms of consumers who are borrowers or lenders who are providing it, right? Overall. I think what was happening is 10 years ago, we had very, very standardized products, right? It was a home loan, auto loan, car loan, or kuch tarah ki loan the, almost it was basically over there. And then on the borrower side also those kind of products were only there. But now what's happening is the providers of capital or lenders of capital are also coming up with newer products, right? We've seen innovation in BNPL, multiple forms of credit cards or education loan or financing for such and such stuff, and that all those stuff is also coming, consumer durable loans and stuff like that.
Yes.
Similarly, I think the aspirations and needs of consumers are also going up, right? I think before this, we were just discussing, right, of how when we took our first loan and now what is the age bracket when they are taking the first loan overall, right? So I think the generation preferences of generations, their ambitions and aspirations are changing over.
Yeah.
And I think we all have to change with that need, right, overall, and that infrastructure. I think for this decade per se, Amol, for retail, right, we as an institutional Lendingkart have identified 3 critical changes that will have to be made, right, overall for us and for the ecosystem. First, Amol, I think the days of branches or spoke model, right, where you used to say that all the people used to claim that mere paas itni branches hai or I have so many basically people on ground, that has changed to cloud and digital infra, right? What kind of cloud and digital infra you have and everything is making a precedence over branches. Second important thing I think all of us are realizing, Amol, is personalization of services, right? For the longest time, the banks or institutions or lenders used to design products. And then whoever used to fit in that, they would give money to that guy. But that has to be changed, right? Because if now everybody wants money, you have to start customizing it to that guy, that means, right? So laughingly, basically, we have multiple types of shampoos, multiple types of butter, multiple types of breads available. But those variations are not available in financial services, right? That will have to change. Similarly, miniaturization and micro-miniaturization, which we have seen in most of the industries, right? Has not happened in financial services, right? So the shampoo sachet that happened changed the game for urban rural India as well. That shampoo sachet, because the bottle could not be bought by the lady of the house, right? 250 rupee bottle. That has not happened in the financial services. That is the transition that we are ordering. This miniaturization, personalization, and designing for the customer was dependent on data, internet, and public infrastructure. That all 3 have got massively sold in the country as well. Lastly, I think, Amol, another transition that we are seeing is experience and engagement. We are living in a generation where you want cab in 10 minutes, food in half an hour, and any delivery in 24 to 48 hours. And you want a live streaming, right? In this generation, if you ask people that go to a branch, get a financial services or something like that, it's going to be not easy. I think financial services will have to now start catering to experience and engagement as well. So these are the 3 trends that we are seeing in financial services right now.
I think you summarized it really well, in fact, in a far more meaningful manner. The current trends. In fact, I can see the focus specifically on the consumer finance business.
Yes.
And I have been also, seeing, in fact, the regulatory bodies are also talking about the sachetisation of, the financial products.
Yeah.
Not only in the banking or lending, but also on the insurance and many other things.
Right.
But then, that's where I would like you to tell us, because you're a new age company, when the sachetization is happening, earlier the lending institutions or the large institutions could not get into it because this was not a profitable proportion for them.
Yeah.
Is it going to be a profitable proportion for you? Because, if the ticket size is low, there will be very less margins, or perhaps there will be margins and the operation cost could be huge.
Correct.
Because digital cost is also involved there.
Correct.
How are you going to, map these dots?
So, I think, Amol, for the longest time, I think the earliest while institutions were also now doing good job as well. I think credit, to a large extent, was solved by them, right? Understanding the customer and everything.
Yes.
Only thing that across for miniaturization or micro miniaturization of products was struggling was one, distribution, right? How do you reach that customer without, because meeting him, going and interacting with him used to have a large cost, right? And that cost was finally put on the loan amount overall given, because you have to cover that cost. Similarly, delivery of that loan, right? So once you've interacted with that guy, he's interested, then the entire process that follows in terms of delivery of loan is also a costly affair, right? Now what's happening is because of technology, right? Because of overall mobile as an instrument, right? Or as a medium overall, or internet as a medium overall, that distribution, if you build a technology overall and if you do that and people have access to that, that has given people access to a distribution by borrowers sitting at their home, a lender sitting at their office, able to interact, engage, and do the same type of conversation which they earlier used to do. Right? That has been solved. For delivery of loans, I think one of the major transitions that has happened in the last 5, 7, 10 years in India per se as well is, like I said, data is now very easily accessible. We all know that account aggregator is there, and ITR, GST data is going to be available on that soon. Overall, similarly, internet prices are one of the lowest in the world. Thirdly, Amol, what's happening is in India, if you look at, we have one of the best public infrastructures, right? In terms of community stacks, as we call it, or public stacks, as we call it, right? If you look at it in terms of UPI, it's one of the greatest successes, kind of data that it generates, and volume on value of transaction it generates. Similarly, kind of eKYC, e-sign, e-NACH infrastructure that we got and everything, right? That is kind of phenomenal. So for solving this, Amol, I think the distribution has been solved through apps, UI, UX, and delivery has been solved through backend infrastructure, which is a public good, which is again been building up quite well. Right. So I think that should help in solving for these needs, Amol.
Right. So I copy you. Let me ask you a very, maybe take your thought, not a direct question.
Yeah.
We are in a different world today. In fact, we were exchanging some notes on the world disorder where the generation is changing. And today the whole business models are also catering or personalizing towards the new generation, right? Perhaps we could not have imagined that we will be crafting a loan product for his demand of buying clothes for one day. Something like this, when he's attending a wedding and something like that. So doesn't a CA in you, scare you that perhaps this guy will not, repay your loan? How do you actually analyze all this, trends? Because we didn't grow up with all this underwriting and accessibilities and this risk. In fact, we were learnt the lessons that, jitna hai utna hi kharch karo. Right? And now this generation is absolutely. And why I'm asking is because most of the fintechs have this generation as an integral part of the whole ecosystem or a borrower.
So I think very valid point, Amol. So I think the moot point here is accessibility, right? Accessibility works both ways, right? So if you can access the loan guys can also access you, right? So the medium internet, in that sense, is a good medium also and a bad medium also. I think we've all heard the pitfalls of that as well. Again, in terms of data as well, right? It is a good thing to have access to data, but it is a bad thing as well because you are fully accessible, right? So even if you don't meet a person, today you can get full picture of that person with his data, right? Even today, when you are able to connect that person is also able to connect back with you, right? But I think this is a generational change. We all will have to live with it, right? So today what happens is, and I think we normally also get asked this question that when you give that guy a loan, right? Overall, how do you intend to collect it back? That person, because he's making us with his consent, his data accessible and himself accessible, right? Overall. Now that we have his data and him accessible, right? He knows that we can reach out to him and he can reach out to us, right? So that is the connect that has already been established, right? And if you look at it from that perspective, almost we have Aadhaar as well, right? So once you have an Aadhaar, you have a mobile number. Your mobile number is linked to your identity. Your utility bills are linked to your identity. Your house is linked to your identity, right? And nowadays, people are also even in rental agreements, right? They link everything. So it works both ways. One, if you don't want a loan, you don't give accessibility to data and yourself to people, and then people will not be able to access you. But if you give that, then you go ahead and do that as well. So it's both ways, I think, that it works.
Yeah, I'm sure they need money. You need to make business out of it, and serving the needs is quite.
Serving the needs, I think, like we were just discussing, absolutely. Overall, was the needs have also increased. increased, right? The wants have also increased. I think we just discussed when we got our first cars, right? What generation first cars and how we used to travel to college and now how people travel to college, or even if they complete the college or don't complete the college is a question, right? We didn't have that choice for us overall.
But doesn't that worry you sometimes? What if these boys don't return the loans?
I think it worries me. It does worry me in terms of not these boys or younger people not returning the loans, in terms of discipline and values, right? That they will carry for life overall, right? Because today what will happen is, more knowingly, unknowingly at a young age, if you borrow and if you don't repay, right, then for future you will be outcast, right, from the borrowing community. You want to be borrowed for a home loan, auto loan, car loan, two-wheeler, education loan of your children, foreign travel of your parents or yourself and everything, right? So that kind of, we as community, right, digital lenders, were not that much worried about them not repaying 1 or 2 or 5 loans to us. We are worried about whether they are financially literate enough, right, to plan, build and foresee their future, right? Because I think what we did in our generation, or maybe 10, 20 years back, was one, accessibility was limited, but we still planned it. Like what portion of salaries to save, what portion to invest, what portion to maybe buy a house, when to buy a house and everything. That financial literacy, I think all of us digital lenders and other lenders are also trying, but that as a community also maybe we'll all have to start building up, because when we took our first loans, we were into the business and mindset and family and everything. These guys are taking the loans much earlier. If they have the financial literacy, then it won't be a problem. But if they struggle with that, then they will take decisions which will hamper their life in future.
Right. Sure. So now let me, shift your focus slightly to Lendingkart.
Sure.
I understand the company is profitable now. It's been quite some time since you're operating in this space.
Yeah.
And since the market is also changing,
the
regulator is also active in drafting guidelines so that the industry could, move in the right direction. What's next for you? How do you see Lendingkart now henceforth? How's going to be the journey for you? Because profitability is one big pillar or the achievement that everyone wants to have, which you already did. So what next for you now?
I think Amol, I think touchwood, we are in a happy space, as you would call it, right? And I think for happy space, basically when we started FinTechs, right, a lot of partners, we were supposed to achieve 4 things in our business, right? The first thing in our business was supposed to be capital efficient, right? So that because like in the erstwhile you used to open branches, hire people, have infrastructure costs and everything, and you would break even after 3 years, right? We kind of don't have those branches and everything. We spend on tech, but that is a long-lasting spend that we use for future generations. So one, capital efficient in terms of co-lending and other stuff, right? That we have become capital efficient. Second important piece for us, obviously, was for all FinTechs was to have sustainable business, long-term, right? So that you don't depend on external money or investors or VC money as well. And you, on that money, generate the right kind of ROE as well, right? That is also we are there that we've been able to do that. Have a prudent capital structure and generate a right kind of ROE as well. Right. Thirdly, we were also supposed to have a high growth business, right? Overall, right? That we grow more than required and we have high growth business as well. And fourth, Amol, what was required was for us to have a moat overall in our business, right? So what we are doing overall, what we are performing and everything, is that useful to the ecosystem? Is that useful to the society? And are we competing with the existing institutions and everything? We've been able to solve for all 4 those things or for our core business, which are loans to MSME. Now the idea is, Amol, like we've been discussing, that we build distribution with MSMEs or connect with MSMEs through our brand and products. We've been able to set up a delivery ecosystem as well, right, for these products to MSMEs. We've been able to do that. And somehow we've been able to connect with him across our journey. Right. Now the thought is that we started with one unsecured business loan as a product. What more products can we do it with him, right? We are now going to soon launch a credit card for MSME because that is again we realize a very, very large need in MSME space where self-employed people don't so easily get a good credit card for their business, right? To run a business and everything. That is one. Secondly, we just acquired last year a company called Upwards, right? So again, it's a personal loan lender. What we realized is that on an average, all of these SMEs are like 4 or 5 employee people, right? Family run business. These employees don't get any money, right? So we thought if we're giving MSMEs the money, why not start giving money to the employees of these MSMEs? SMEs who we are directly, indirectly connected.
Okay.
So that's another thing. Thirdly, Amol, across our journey, like I've talked, right, we went ahead and built all technological capabilities of underwriting, originations, collections. We are now thinking we should monetize them as well by offering productized versions of them to other institutions. So these are the 3-4 things that we are planning for next 3 years Amol, for ourselves.
Okay. Quite interesting. Wish you the best. I think these are some of the interesting steps that you're working on. But tell me something with your experience, because you are now, I won't say a oldest, but quite a mature company in this
almost
space.
9 years ago.
Yeah, exactly. So, where do fintechs has to spend a lot of money, and where can they make a lot of money?
I think early years, all of us somehow started focusing on distribution, right? Because conventionally it was branch model, right? We all had to do away with them, right? We disbursed almost 15,000 crore in 4,400 towns and cities. So we've given a loan in Jammu Kashmir, Guwahati, Jamnagar, and Kanyakumari, right? It was not easy, so we spent a time over there. I think also under algo-driven underwriting, digital corrections, we spent a lot of time over there, right? Now what's happening is all of us have a funnel which is like this, right? We have a lot of people coming in, but the conversion is very low. So across our delivery stages, right, because of maybe documentation requirements, data requirements, or some connectivity problems or this and that, right, ecosystem problems, KYC problems, something like that, we lose the customer. So initially the idea was to bring in as many as possible as distribution. Now the idea, a lot of us are focusing on how much you can improve your conversion funnel, right, or delivery capabilities to give as much money possible to as many people. So I think going forward, I think next 2-3 years, a lot of us fintechs are going to focus on delivery part of it. How do we improve that? How do we improve experience, engagement of the consumer, UI, UX better, and everything that's gonna be there. And I think touchwood, post 22, everybody's realized that profit is important. Right?
Absolutely.
Overall, sustainable business is important. You cannot just continue to run a burning train and hope that somebody will continue to pour water on it. Right? That is what I think a lot of fintechs. So I think delivery of services, enhancing the quality of that, and secondly, maybe making it profitable is what is the current focus on fintech.
So what is the sutra here? If you look at, if we are to focus, if fintechs has to focus on delivery, become profitable, and manage operations. At one side, the customer acquisition cost, and at one side, the customer inversion, or acquiring the customer. What is the sutra here or the mantra here, if you could share?
So, mantra here is, a more simple mantra is one, understand your customer and give him what he needs, right? At a right pricing and a right risk, right underwriting. I think a lot of institutions which have struggled, either they don't identify the right customer, or they don't give him the right product, or if they give him the right product, they don't give him at right pricing, and if they don't give him at right pricing, they don't understand the right risk, right? So BNPL, right, as a product, we all criticize it. I think it was one of the fantastic products where you are making miniature versions of it available to people, and maybe giving access or power to people who needed it, right? Maybe today, some people would be there whose children can afford a larger phone or a better phone. But there are parents who cannot afford it, right? But there are parents who, if somebody gives them a power to pay across for next 12-24 months, can make their children afford something like that, right? Maybe a better education, maybe a better travel instrument, maybe a better something like that. But I think where we went wrong as an ecosystem in that was maybe understanding the right pricing or right risk for that, right? So right customer got identified, right product was given to him, but it burnt out because it was not right pricing or right understanding of it. All these 4 things are required.
So tell me one more thing, I just want to understand this part, when does actually a fintech is a sizable fintech, when it's making a business of 5,000 crores of disbursal, 10,000 crores of disbursal, because you never know when will he make money. He can, lend to more than even 10,000 crores, but still he can't make money. So according to your experience, when is he a sizable or quote unquote profitable, sustainable fintech according to you?
I think profitable is, again, being a CL quote over break-even point, right? Overall. So break-even point is a point, Amol, where you have a certain fixed cost, right? And after covering your variable costs, like wages and everything, you start covering that, right? We had set ourselves a level of close to 1,000 odd crore. Then post that, one, we will start covering variable costs. And I think at toward 1,000 crore, 1,500, 2,000 crore, we realized we'll start covering fixed costs as well, right? So that was there. The only reason we took a larger bouquet was because we were investing heavily in tech as well, right? I think there is no set. Even 100 crore fintech, can be profitable and a 10,000 crore fintech can be a loss making. It's all upon the aptitude and attitude. See, again, finally, capital is a scarce resource, right? You have to very, very prudently own it.
Yes.
I think, unfortunately, we've been last 7-8 years in fintechs, we've seen times like this, right? Where capital was so easily available and capital is totally not available. So I think we have been spoiled for choices sometime and we have been literally starved for food for some time overall. But I think it's a balance, but I think we all have learned our lessons as well overall. I think what I would suggest normally fintech should focus is like in India, normally 5,000 crore is a benchmark where you become a large institution. And 5,000 crore is a benchmark where you can go to public markets for an IPO and stuff like that. If a fintech is building a fintech, then focus should be that if I want to make returns for my stakeholders, ecosystem, give it back, 5,000 crore, they should take it as a mindset advice for themselves. That this is where I will have a very, very sustainable and fruitful business for myself, ecosystem, and overall.
Right. Yeah, I think that's a sizable one.
Sizable one,
Yeah, sure. But what next for you in terms of maybe raising more funds, hitting the capital market? Because everyone is rallying towards that lane these days. Every fintech wants to get listed. Any plans on that side, Harsh?
So again, capital again is a resource for us.
Yes.
Because we borrow it and lend it. And along with borrowing the capital, we have to put in certain money of our own equity as well, right? And that is called leverage, and we continuously do it. So we've been raising money for the last 2-3 years. We've had more than enough, right? So we'll do it. But again, in next 6-12 months, we'll raise more money than anything. I think Amol, we already today are at close to 6,000 crore of a year, right? Overall, I think by end of this year, we should be ending up of like closer to 8,000 odd crore a year, right? 7,500, 8,000 odd crore. I think we are also turning into a size and scale where we think we are kind of in next maybe 24-36 months ready for public markets outgo, right? I think next year and like 24 we'll end at 8,000, 25 we will end at some 14-15,000 odd crore, which we feel is a very, very prudent size for us to go out and make it worthwhile for our stakeholders and investors. So another 18-24 months actually for us will go out public market. Again, public markets in India and private markets both have their own turns and cycles, right? Today, like when on one hand we see private markets are a little bit on the back foot, public markets are literally like soaring heights every day, right? Overall, so we will have to figure that out on those kind of stuff. And I think they are like economically linked in what is the rate cycle. Interest rate cycle is one of them. How's the economy doing? What are the inflation rates? What's the GDP growth rate? I think elections next year will also have a say in that, right? Which government, how government, and all those things. So we will have to figure out and work with our stakeholders to see where and how we go on it. So we'll plan for that.
But given the current situation, economic situation, fortunately the data points are quite positive, right? India is really rising and shining high. But on the credit growth, still there are a couple of challenges. So has that made you a little worried because the credit cost has gone up significantly?
Yes.
Are you facing challenges in raising funds?
So again, Amol, this is like this is a cyclical business, right? So what happened with a lot of us, we all went to wave 1, wave 2, wave 3, right? And all of us had like 20 and 21 as reasonably tough years, right? Overall. Then what happened is because we had taken so much pain, all our bodies were cleansed. Right? So 22 was literally like a fab year for all of us because whatever had to be written off, all our customers, we did it in 20 and 21. So 22 was fab because obviously if you are cleansed, you will run very fast, right? But again, this is a cyclical business, and I think normally what happens is when interest rates are high overall, right? It goes through it somewhat, right? Because people need money to keep on running businesses, growing their businesses and everything, right? Now what we are seeing is sooner or later when the interest rate cycle starts easing, right? The lending business becomes much more easier and much more fruitful and growth will start happening. But this is, I think, part of ecosystem, right? I think everybody goes through it and we will continue to go through it overall. I think again in lending business, you have to be very clear that we will not be always like this. There will be periods where we will have to be conservative, there will be periods where we have to plateau your growth, and there will be periods where we have to push the growth. Right. So we continue to do that. I think ecosystem does that as well very well.
Sure. And one more question on this front is, I mean, we discussed this part then when actually RBI came with those guidelines specifically on digital lending. A lot of fintechs had to recraft their whole operations and the strategies, right? Because FLDG was quite disturbing to them. But it's been more than a year now. A lot of fintechs realize now how to deal with it. One interesting fact is RBI did not say stop your business, right? They can kind of very supportive. Do it in this way. But ultimately, it's a regulation. Ultimately, it's a compliance. Ultimately, it's a risk that you have to mitigate, right? So, how is it panning it now after a year? Do you think that the fintechs are now well settled with what RBI has said and they're heading in that direction, or they're still finding it difficult in terms of compliance and other challenges?
No, I think most of us have adapted very well to it, and I think Amol, we have to be candid and transparent in speaking that we are one of the most progressive regulators in the world, right? When you look at UPI success or payments infrastructure success or overall micro and miniaturization of services and overall digital and cloud introduction and everything, we are all almost there. I think from regulators' perspective, see, they are not worried about who's borrowing and who's lending. They are worried about that money is depositors' capital, right? That somebody is depositing that capital somewhere and that is getting used for doing that transaction. So they are very, very particular about the fact that money has to be safe and secure. And I think that is why Amol, what they are doing is they are setting all the guardrails around it. And I think for a prudent ecosystem and for growth of the ecosystem and a stable ecosystem, these guardrails are required. And regulator has done that. And I think fintechs are diligently accepting it and working on it and so on. As much as I know, almost all of the large fintechs are reasonably quite happy and are doing wonderfully well on all those regulations.
Sure. Lastly, are you happy? How happy are you? Are you measuring your happiness because you became profitable? Started kind of very early, which everybody is trying to adopt now. Ecosystem has blossomed. There is a lot of demand for credit now. So, are you happy?
No, I think I am very, very happy actually, because profit does take off a burden off your shoulder, right? Overall burden in the sense that finally, like I said, you have been there, done that. But profit is kind of a milestone which says that, okay, you are on the right path, you are doing it. And it's not for me, right? I normally joke with the team that we have almost 800 people, right? They're on me right now. It's even if I don't work for 8 hours, 799 people are working 8 hours, right? 799 people and their families depend on it, right? Overall. I feel happy for the fact that now this proof of concept is happening, 3,000 people out there who are solving for the ecosystem and the society, right? Overall, like we were just joking, we have to work for another 20 years. Better be happy and do it rather than anything else.
Right. Well, sure. Quite meaningful, Harsh. Thank you so much for your time and sharing all these insights here at FinTech Diary. And, it was quite meaningful to listen to you.
Sure. Thanks a lot, Amol, for inviting me here. It was wonderful talking to you.
Thank you. And thank you so much for watching FinTech Diary on etbfsi.com. Stay tuned, stay connected to only etbfsi.com. Thank you.